All right, welcome to the Explainer. You know, when a financial giant like Invesco makes a move, the whole market feels it. And boy, did they just make a move. They just dropped a record-breaking quarterly report, and we're going to dig right in to figure out how they pulled it off and what it all means for the world of investing.
So let's get right to the big, flashy number. I mean, this is a huge one. Invesco's assets under management, that's AUM for short, just smashed a company record. We're talking $2.1 trillion. Trillion with a T. Just to give you a sense of scale, that's bigger than the entire economy of Canada. Yeah, it's a mind-boggling amount of money.
And get this wasn't just because the stock market had a good run. Nope. Invesco actually pulled in a staggering $28.9 billion in what's called net long-term inflows. Basically, that's fresh cash from investors pouring into their funds. It's their best performance in attracting new money since way back in 2021. So people are actively choosing to put their money with them.
So the big question is, what's their secret sauce? How'd they do it? Well, that's what we're here to figure out. We're going to break down their record-breaking quarter, look at their two-part plan, peek inside the engine room, check on their financial foundation, and then talk about the future of their iconic QQQ fund.
Okay, let's kick things off with Section 1, diving into this incredible, record-breaking quarter. Let's see what the story is behind these stunning numbers.
So Invesco's CEO, Andrew Schlossberg, he came out and basically said, hey, this wasn't just luck. You can see it in his quote here. What he's really saying is that this success comes from a very deliberate plan. They're making specific moves to unlock value and push the company forward. It's all about strategy, not just riding a wave in the market.
All right, so what is this grand strategy he's talking about? Well, it actually boils down to a really clear two-part plan. Simplify the business, and then accelerate the growth. Simple as that.
And this slide just lays it out perfectly. You've got this two-pronged attack. On one side, you have simplify. I mean, look at this. They're selling off stuff that isn't central to their main business, like that software subsidiary, Intelliflo. They're also streamlining their investment teams to make things run smoother. Then, on the other side, you have accelerate. This is where they're hitting the gas pedal. They're teaming up with Barings for new funds, making a huge move in India with a joint venture, and even revamping their massive QQQ ETF. It really is a classic case of trim the fat, feed the muscle.
Okay, so a plan is great on paper, right? But the real question is it actually working? And where is it working? Let's pop the hood and look inside the engine room.
Now, this table tells you pretty much everything you need to know. Just look at that top line, a whopping $21.4 billion pouring into their ETFs and index funds. That's huge. And right below that, their businesses in China and India, another $8.1 billion. Super strong. But then you look down at the bottom, fundamental equities. That's your classic old-school stock picking. Saw $5 billion head for the exits. So what does this tell us? It shows that Invesco is perfectly positioned to ride this massive wave of people moving into passive ETFs and global investments.
And this isn't just an American story, not by a long shot. This chart right here paints a really clear picture. A full 2/3, that's 66% of all that new cash came from outside the Americas. We're talking Europe, the Middle East, Africa, and the Asia Pacific. It just goes to show you how massive their global reach really is. It's a huge, huge advantage.
You know, growing like crazy is great, but you've got to make sure the foundation of the house is solid, right? So let's shift gears and see how Invesco is doing just that, building a stronger financial foundation.
Okay, I know this isn't the most exciting topic, but it is so important for the health of a company. Invesco is actively deleveraging. It sounds fancy, but all it really means is they're paying down their debt. It's like when you decide to get serious about paying off your credit cards. They're cleaning up their balance sheet to get into much better financial shape.
And they're not just talking a big game. In just this past quarter, they paid back a cool $260 million of their bank loans. That is a serious chunk of change.
And you can see the proof right here in the pudding. This chart shows their leverage ratio, which is just a way to measure debt compared to earnings. And look at that trend. It's been steadily going down over the last year. For this metric, lower is definitely better, and it shows that their hard work to get their finances in order is absolutely paying off.
All right, for our last section, let's talk about one of the most famous funds in the entire world, an absolute crown jewel for Invesco, the QQQ ETF, because they've got some big plans for its future.
Now, if you're not familiar with QQQ, let me just say it is a behemoth.
We're talking about an exchange-traded fund with over $386 billion in it. All it does is track the 100 biggest tech-heavy companies on the NASDAQ. Think Apple, Microsoft, you know the names. For millions of regular investors, this fund is a cornerstone of their portfolio.
So, what's the big plan here? Well, Invesco is trying to modernize the whole structure of the fund. They're telling shareholders it's a win-win. For you, the investor, it could mean lower fees, which is always good. For Invesco, it opens up more ways to run the fund efficiently and maybe even make a little more money. The proposal is up for a shareholder vote right now, and the clock is ticking until December 5th.
So when you put it all together, the picture is pretty clear, right? Invesco's focused strategy, simplify and accelerate, is firing on all cylinders. It's bringing in record amounts of money and assets. But, and there's always a but, that leaves us with one big, lingering question. In this crazy, fast-changing world of investing, is this impressive playbook going to be enough to keep them at the top of the mountain? Only time will tell.